Hi, welcome to the Edified Equity Podcast. My name is Dino Pierce, CEO of Edified Equity, and here we focus on all the unique benefits associated with being an equity investor in an apartment syndication. You can learn more about us on iTunes, Stitcher, Facebook, BiggerPockets, and our YouTube channel. Today I want to talk to you about direct investments versus the stock market. So direct investments, hands down, undoubtedly are the premier favorable investment vehicle for the savvy investor. The public market is volatile, it is inconsistent, and it definitely has its ups and downs, and you know this if you are familiar with the red and the green. After the stock market crash in 2008, many investors, simply put, just don't feel comfortable having their money in the stock market. Furthermore, they don't care to pay for high, oftentimes concealed fund management fees. And lastly, they sense a lack of transparency. They feel like there's a lot of ambiguity in the investment and certainly feel like there's a lack of control. I can speak from this or to this as I have experienced it personally. I had a large amount of money invested into the stock market with a company that I really believed in. I thought they had a strong product that was going to change people's lives. And that's all true. What I didn't know is that the executives were going to be misleading and blatantly lie to Wall Street regarding the earnings that the company was bringing in. So what we saw was a drastic rise in the stock price. And then when this became public, we saw a dramatic fall. And it stayed down for 4 years until it finally slowly and gradually rose back to that price. At that time, I had had enough. I was tired of the lack of transparency, the ambiguity, and I didn't like how it was misled. I cashed out, I was taxed heavily, and I learned a big lesson. I would have been better off, as I say, burying my money in the backyard, fighting inflation. Of course, I would never do that. So the mission was, what kind of investment is favorable? Where can I put my money? And there's a lot of people that are also in that situation. So I, because of that, I get mailed, and personally this is happening to me, to be part of a class action suit against that company. On the other hand, let's look at multifamily as a direct investment. So in multifamily, there's going to be market shifts. There's actually 4 cycles to the market. However, when we choose the right asset, when we select the right location, we know that the jobs are diverse, and if anything happens, people are not going to leave. There's enough jobs to support every type of livelihood. The economy's booming, and people are attracted to move into that area. So while the market can shift, when we choose the right workforce housing, the B and C class, safe, affordable housing, that is always going to be in demand, and we can weather any storm that comes our way. Regarding transparency, we have 100% transparency. Between our operating agreement, the subscription agreement, and the private placement memorandum, the investor gets to see anything and everything under the sun related to our business plan, what the fee structure, how that's going to be split. And actually, they really like how the splits are, because I've talked to many investors, and when talking to them, they always seem to comment and say, wow, this was very favorable, very transparent. I know who's getting what, why this person is getting what. And it looks like the entire deal is actually structured around the equity partners on what they're going to accept as an acceptable rate of return. And that's plainly, it's the truth. Once we find the market, once we find the asset, then we need to find out and see if what we're offering at and what our projected returns are going to be able to bring back a favorable return to the investors. If the answer is yes, after we complete our due diligence and we see this as a deal, that's how we know whether or not we should be moving forward. So we have 100% transparency there, and they prefer the deal structure and how the returns are driven based off of what the equity investors are going to accept. Let's talk a little bit about ambiguity related to the investment. There is no ambiguity. There's an address. We know how many units we're investing in, and so do the equity partners. If they choose to do so, they can get on an aircraft and fly out to the apartment and physically touch it, because it's real estate. It's an apartment community. They're not putting their money into the stock market where it might be spread so that they can be quote unquote diverse, but they actually have very little understanding of what's happening with their money and where they are invested. The team has control. When you look at control in the stock market, you don't have control. You're relying on executives, you're relying on the employees, you're relying on the product and the manufacturing and everything to be stellar in order to give you a return. In this case, the team selects the right property management company. The team selects the asset. They manage the manager. They're going to work with a cost segregation team to make sure that we take advantage of all the unique tax benefits through accelerating depreciation. And they have control over the outcome of the asset. And for those reasons, I just want to finalize and say, for those reasons, direct investments into an apartment community is, number one, desirable. Number two, it's very welcome and people want more of it. And investors are finding it refreshing. They love the openness. They love the transparency. They love the asset class, as do agency lenders. That's why they're willing to lend us millions of dollars to own and operate this business, this asset class. So I hope you found this information helpful. I don't have anything to sell. So if you know someone who is feeling the same way about the stock market and they're having trouble finding a place to put their money, please turn them on to this educational outlet. Again, I don't have anything to sell, but I am on a mission, and that mission is to spread the word about this phenomenal alternative investment. And I will continue to deliver quality consultative education on a routine basis. This is Dino Pierce, CEO of Edified Equity, signing off. Make it a great day. You certainly deserve it. Goodbye.